Hi, Patrick. Welcome back to another episode of Our Worldview in Gold, the Hong Kong government's plans for, turning Hong Kong into an international gold trading hub. So, what do you think of the policies or what they want to achieve with it? Can Hong Kong, build more refineries like they want to? Because there are already several refineries throughout Hong Kong, right?
Well, that's true. And actually, when I heard of this policy the first time around, I believe a year ago, and I heard the announcement on the radio, and given my involvement with the Chamber of Commerce, I also got certain email updates from the government here. My first thought was, what are they talking about? Hong Kong already is a major trading hub for physical gold in particular, but in terms of physical silver as well. So what exactly are they trying to do here? We already are a major trading hub. Now, it sort of goes without saying that this is in line with the mainland China policy to create a major trading hub for physical commodities in general, but with a particular focus on precious metals. So Hong Kong government is in line with that mainland Chinese policy. And as I've said many times in many meetings with the local government here, all the ingredients are here already. As you mentioned, there are a number of refineries active in Hong Kong already, including LBMA accredited refineries. There is a very good infrastructure in terms of financial services. So you have the banks that can clear payments on a very, very fast scale and large scale. You have infrastructure in terms of logistics. So you have the warehouses, you've got the secure transport companies. You have the airport, which is very well connected internationally. So you can not only deliver and obtain imports regionally, but quite literally internationally from every continent of the world. So all the ingredients are there, and I think what the government is trying to do is turbocharge that. Now, it's my sincere belief that if you really want to attract another major LBMA refinery to make the significant investment of setting up another refinery here and adding to the production quota or the production capacity here in Hong Kong, you will need to offer them something in return. And my idea really is along the lines that we offer them regular offtake, regular demand for the product by opening up the Hong Kong pension system to gold investments. The Hong Kong pension system is called MPF. It's the Mandatory Provident Fund. It is a government mandated fund. It's forced savings basically for every employee and self-employed person in Hong Kong, that they have to put a certain amount of their monthly paycheck into a savings account, which they can only access once they retire. And in a typical Hong Kong setup, it's government mandated, but it's privately organized. So these MPF savings accounts, they are held by private institutions like banks or insurance companies. And they offer traditional financial products for investment like equity funds or bond funds and things like that. Where we are lacking, and I think it's a good idea for a long-term savings anyway, is to allow physical gold savings in those savings accounts. And if you think about it, if you opened up the Hong Kong pension system for regular investment by the millions of contributors into that Hong Kong pension system, and that they could invest some of that into physical gold, that would create an instant demand for physical gold products. And it's again my sincere view that if you did that, you would not even have to go out and look for refiners that wanted to come to Hong Kong. If you announce that in the international press tomorrow morning, next week, you'd have a whole bunch of big international LBMA accredited refineries that would be on the phone to the government looking for an appointment to discuss how can they relocate or how can they go about investing in Hong Kong and opening up another refinery here and adding to the capacity. Yeah. So again, coming back to your original question, I think A, the policy is a good policy. I think B, that policy can work for your average Hong Konger as much as it can work for the Hong Kong government. And if you are a bit creative about it, it can actually also offer an amazing alternative for pension savings to ordinary Hong Kong citizens as well. And we'd be, I believe, only the second place in the world after Australia to allow, pension savings to go into physical gold.
That's a great point. The MPF could definitely use a bit of variety there. I think we've discussed this before. We're kind of sick of the MPF. All the providers, they only have equity portfolios, bonds, cash. And I think I was telling you, I asked my MPF agent, and I was told that the only gold was in one of the really minor portfolios, and it only had about 10% of a gold ETF. So that really didn't do much. Imagine if we had,
Well, you
a
see,
physical portfolio the last 2 years. It would.
absolutely right. And as anybody who know, I mean, a gold investment should be a long-term investment. You
Mhm.
don't usually buy gold today in order to sell it tomorrow. It is you usually acquire gold with a medium to long-term perspective, right? And that's why I believe it's a natural fit for pensions savings because you when you start your job in your mid 20s or whatnot, you're looking at a 40-year horizon. And even if you just look at the past 20 years, I've got customers who bought gold 20 years ago at $500 an ounce. Now
Wow.
we're at 3,800, right? I mean, it's and at the end of the day, when you retire, you can go and then you can pick up your gold bars and you can put them in your safe at home, and if you want, you can leave them for your children or grandchildren. It's not going to go bad. It's
Mhm.
going to continue to appreciate. It's going to continue to provide an insurance against geopolitical, political, and economic upheaval, completely independent of any government, completely independent of any currency, completely independent of any political system, truly international. So even if you wanted to then, once you're retired, retire to Australia or retire to Europe or America, you can just take your gold with you and you can convert it in US to the United States dollars, in Canada into Canadian dollars, or in Great Britain into British pounds. Try do that with your equities portfolio, right? You'd probably have to sell everything, liquidate it, then take the money out, and then transfer that over to your account in the UK, and then you'd have to redeploy it. So you'll have the bid ask spread everywhere, and then you might have FX costs and so on and so forth. It's so again, coming back to your original point, I think it's a really good policy. And if you're creative, I think it can really work very well for everybody here in Hong Kong.
Well, if I had to say, I think I would love to have a silver-centric portfolio. Silver, bullion silver, maybe some ETF and miners, because silver has
Yes,
so much utility, if it only has its own portfolio. And look at silver, look at how
absolutely.
silver's doing recently.
Absolutely, and again, that is another point that we're exploring together with a government agency. I won't say the name right now because it's a bit early,
Hmm.
and we are also working together with a lobby group. It's the Association of Listed Corporations in Hong Kong, and we are trying to get the Hong Kong Exchange to revisit their rules of listing. And the view is especially with a focus on mining companies. There are a lot of miners, especially in Africa and also Latin America, which are looking for alternatives to the traditional listing exchanges, which are London and Toronto. And Hong Kong, for me, again, is a natural fit. You've got deep liquidity here. You've got the Belt and Road Initiative, which includes many African countries and also some Latin American countries. And you've got the deep financial markets here as well. And why can we not list them here in Hong Kong? Especially given that you actually are listing here in a US dollar environment, which for a mining company is actually very beneficial because most commodities still trade in US dollars. They don't trade in pounds and they don't trade in Canadian dollars. So if you had a listing here in Hong Kong, it's essentially a US dollar listing. So you're raising capital in the currency more or less because the Hong Kong dollar is pegged to the US dollar. So you're basically raising capital in the currency that your product trades in. And I think there's real opportunity there. There's real demand from mining companies for a listing here in Hong Kong, and we just have to work together with the powers to be in order to adjust the rules here and there a bit in order to really progress that.
Well, all the best with those talks, and it probably
Thank you.
doesn't take a rocket scientist to really guess which department that is. It's definitely not the housing department nor the food and environmental hygiene department. That's for sure.
No, absolutely not. Absolutely
Yeah.
not. Absolutely right.
Well, one last question for this episode. So, do you think the Hong Kong government wants to, or would there be any benefits to attract, foreign buyers, more foreign buyers into Hong Kong? Because I can't really see how they want to attract mainland buyers since, gold trading is already very mature in the Chinese market, and the bullion, and there's a huge tax, right, for them to bring the bullion back to China. So they would be
Right.
targeting foreign buyers, wouldn't they?
I mean, look, there's definitely a market for foreign buyers to acquire gold and silver here in Hong Kong. Again, if you split it up in terms of silver, the value add of Hong Kong is that you don't have a value added tax, so you can actually buy silver without any GST, without any VAT, without any sales tax whatsoever and store it here in Hong Kong, and you have the liquidity in order to exit even large positions very, very fast.
Hmm.
So I think again, for an American-based hedge for a for a European-based investor who is looking to physical silver, you can save 10-20% VAT just on the acquisition. Can you imagine what that difference that can you imagine the difference that makes in your total return? It's absolutely a no-brainer for foreigners to purchase physical silver here. Physical gold, you don't have that tax distortion, but what you do definitely have here is just a deep market. So you can really sell when you want to sell in a very fast fashion. And you are geographically in an area here which is quite an interesting area, and it's a real genuine alternative to New York and to London. And with all that's going on in the world, I think it's quite good to have an established center here, and that this alternative exists for buyers of the of those precious metals.
Okay, but given that and that Hong Kong should have the capacity to take on more buyers, why isn't that happening already right now? Because I know there are a lot of Turkish buyers who buy from Dubai, same with Middle Eastern buyers. Why aren't they flying to Hong Kong already?
Yeah, well, I think Hong Kong still suffers a little bit from the very good marketing of Singapore. Singapore has positions itself as a neutral port that stays outside of the political fray between the US and China. Whereas I sincerely believe that neutrality is more marketing than anything else. But it is perceived in America and Europe that Hong Kong is part of China, which of course it is part of China. But this one country, two systems, whereas Hong Kong really acts as its own territory with its own currency and own legal system and own government, is maybe not fully understood in some circles and not fully appreciated. So I think that is what the government should be focusing on in connection with this whole policy to really drive home this point to international investors, the two systems part of one country, two systems.
Yeah, as with anything else, it's always about the narrative and marketing.
Correct.
Yeah.
Correct. Plays a major role in these things.
Well, that's all we have the time for this episode. Thank you, Patrick.
Thank you, Jeff. Always a pleasure.
Yep, safe driving and see you again
Thank you.
soon.
See you soon. Take care. Bye bye.
Bye.